Okay, hi everyone, and welcome to the Q4 2025 and first quarter 2026 outlook call with FundManagerZech, which is me, Zachariah Zheng, on eToro. Okay, so before we begin, just a reminder that this is marketing communication and should not be taken as financial advice. Uh, Personal recommendations and/or offers or solicitations to buy or sell any financial instruments. This is not. This material has been prepared without taking into account each individual's particular investment objectives or financial situation and has not been prepared in accordance with the legal or regulatory requirements to promote independent research. eToro makes no representation and assumes no liability in the accuracy or completeness of the content of this publication, and your capital is at risk, and past performance does not indicate future results. Okay, so with that, I'll just go a little bit over who I am. So my name is Fund Manager Zach. If you're watching this call, you might be copying me on eToro, where I have a verified track record of coming to 10 years and very proud of that track record. We focus on managing capital with a very long term time horizon where we always focus on downside, and we are investing alongside with you on this portfolio. As per the copy trading standards, we have to put in our own capital, and I put in a decent amount, which I will show you later during the later part of this call. Okay, so we will go over performance review, investment objective, investment process, a recap of 2025 and outlook of 2026. So for the performance review, the other person who is helping us look after this portfolio, his name is Bryson. He is the analyst on this portfolio, and he'll be presenting this part, and I will come back to you after he's done.
Thank you, Zech. I'll start with a brief performance recap. The final quarter of last year was roughly negative, with the portfolio down roughly 4% on a cumulative basis as volatility increased across several positions. That drawdown was within the portfolio's expected risk range, and there were no forced actions or changes to positioning as a result. In January, the portfolio recovered those losses, finishing the month up just over 6%, reflecting a combination of existing positions working as expected and some mean reversion from areas that had previously detracted. For full year 2025, the portfolio finished up approximately 21%. For context, the S&P 500 returned about 15.8% over the same period based on Bullaware data. The key point is that the path included both drawdowns and recoveries, which is consistent with how the strategy is designed to behave over time. Cash levels have increased modestly as a result of profits being taken where valuation targets were met, rather than any change in the risk framework. Thank you. Here's Zach.
Okay, thanks, Bryson, for that update. So, just three things that I just wanted to add to what he said. This portfolio has performed broadly as we have expected. There were losses in certain areas, but they were contained through position sizing. We didn't always bet, according to regular conviction. It depends on the conviction, and we will size the bets differently. And there were no force actions. Nothing about the investment process or framework has changed during the last quarter and even going forward. Okay, so briefly going through the investment objectives. So before getting to positioning, I just wanted to restate the investment objectives because it's important to you understand how we invest. And first of all, I want to say this is our objective is to compound capital over full market cycles. I don't aim to do well just over one market cycle where a certain factor may be doing well. And I have an emphasis on downside control and capital preservation rather than maximizing short term results. This is a longer term strategy where we accept there may be volatility and there may be temporary drawdowns in this process, but our job is to avoid permanent loss and forced decision making. The returns are pursued through a disciplined and repeatable process, which we have refined over the 9, 10 years we have been on the platform. And we do not do so through prediction or leverage or constant activity. What we aim to do is just a repeatable, disciplined process. We do use leverage, but selectively and only on certain instruments where the risk asymmetries make sense. We're willing to be early, patient, and occasionally out of sync with the market. I am not here to chase a particular index or index benchmark returns. We just size risk appropriately, and as long as the thesis remains intact, we will pursue these opportunities. The benchmark is not a single index, as I mentioned, but the strategy is supposed to behave across time horizons and different environments. Equally important, we do not optimize for short term rankings. I'm not here to be the best performer on eToro for any one short period of time. I'm not aiming for headline performance, nor am I trying to react to markets constantly. As a result of these constraints, our primary focus tends to be focused on downside protection and control and position sizing. The portfolio has generally moved less than the overall market during times of stress, although this is an outcome rather than a target. Okay, so the investment process, I'll just keep it very high level. Ideas typically come from areas where prices have moved faster than fundamentals, or parts of the market that are being avoided for non fundamental reasons. From there, we focus on downside first, and we do so by balance sheets, cash flow analysis, and we look at things that could potentially go wrong for capital to be permanently impaired. Position sizing is deliberate, and no single idea is allowed to dominate the portfolio, regardless of how strong the conviction is. And sizing is adjusted based on uncertainty and downside risk. Once invested positions are monitored against the original thesis, we reduce our exits as facts change or as quarterly results come out or yearly results come out. And where in risk increases or where upside is no longer attractive relative to alternatives, we will reduce risk. Just as important, we are comfortable doing nothing. In fact, there will be times where you see my portfolio holding a lot of cash. Cash provides us optionality. Should the market move against us, we have the ability to deploy more. That's one. And two, we do not want to rush into positions. Again, this investment philosophy that we have and approach is meant to be structured and disciplined, not meant to chase and deploy for the sake of deploying. Lastly, our process is designed to limit mistakes rather than maximize activity. So, onto the risk portfolio state, risk posture, and what we're looking for in 2026. First of all, you will notice the cash levels have increased modestly as results of profits being taken. There was some positions where the thesis hit the valuation target, so it no longer made sense to hold on to them, so we took profits. No change in risk framework in this sense. We have, in the first half of 2026, we're looking at increasingly stressed parts of the market, particularly where prices have moved faster than fundamentals or where liquidity has tightened. As you can see here, we look at different geographies, different sectors, and different styles in the market. And wherever we see stress, we will, start looking into. We spend a lot of time looking into the areas that we have identified, but it doesn't mean we take immediate action. In fact, our default posture is to just be patient. What matters at this stage is not really timing the bottom of the market, but understanding where downside may exist and being asymmetrically priced. And we do this by looking a lot at balance sheets, a lot at structure, and a lot of different things that you may or may not look at in a traditional analysis of a company. Until like these conditions line up perfectly, we are comfortable just maintaining cash and maintaining flexibility. Okay, just to quickly show you, I invest my own capital into this same strategy that we are investing alongside you under the same conditions. And I show this periodically just to show you that I'm aligned with you in the market and in our strategies. In closing, I just want to say we have no urgency, we have no changes to our current strategy, and until the facts change, we will maintain our current positioning and maintain our process. Okay, and that's all from us. If you have any questions at all, please do feel free to leave it in the comments of the eToro wall, and we'll be sure to get back to you as soon as we can.